Hello and welcome to the MCQ lecture series. In today's class, I'll be dealing with multiple choice questions with respect to Financial Systems 1, which is the economics general paper for SYBA. So let's get started. The first question is, dash is a financial contract obligating the buyer to purchase an asset or the seller to sell an asset at a predetermined price. So what do you call such a financial contract? Whether you call it to be futures, whether you call it to be options, whether you call it to be global depository receipts or American depository receipts. So here it is clearly saying that dash is a financial contract obligating the buyer or the seller to either buy that particular asset or sell that particular asset at a predetermined date. So here, or predetermined future date. So therefore here futures is the correct answer to this particular question. So futures is a financial contract obligating the buyer to purchase an asset or the seller to sell an asset at a predetermined future date. So I hope this question is pretty much clear. It is called as futures. It is just a financial contract, and it is an obligation obviously both on the buyer as well as the seller. Let us now move to the next question, which is talking about dash is a financial derivative that represents a contract sold by one party, that means the option writer, to another party, which means the option holder. So what do you call such a thing? What do you call such a financial derivative that represents a contract sold by one party, that means the writer of that particular instrument, to someone who's the holder of that particular instrument? So whether you call it to be futures, you call it to be options, ADR or GDR. So here I have already given you the answer. They might not give you in brackets who's option writer and who's option holder, but here the correct answer is options. So options are what? It is a financial derivative that represents a contract sold by one party to another party. Now that one party who's selling the contract is called as option writer, and the one who's getting it or buying it is called as option holder. So therefore the correct answer to this question is option B, which is options is a financial derivative that represents a contract sold by one party to another party. So I hope this is pretty much clear. The two parties involved are A, option writer, and B, option holder. So therefore these are the two parties involved in this financial transaction. I hope the question is pretty much clear. Let us now move to the next question, which is talking about a call option gives the dash the right to buy the asset at a given price or a strike price. Now this given price is also called a strike price. So therefore a call option, now this is the option which is available, gives dash the right to buy the asset at a given price. So whether it is buyer, whether it is seller, whether it is government, or none of the above. So here obviously it is going to be buyer. So a call option is giving the buyer, here the correct answer is buyer. It is giving buyer the right to buy the asset at a predetermined or a strike price or given price. Okay, so this is what the call option is looking at or catering to. It is just giving buyer the right to buy an asset at a given price or strike price. So usually they use this term called a strike price, but you should know what strike price means. It is just the given price. So therefore I hope this question is pretty much clear. So here the correct answer is A, buyer. Let us now move to the next question, which is in similar fashion, but it is about put option. So there's a call option and there's also a put option. Now let us see what is happening with respect to put option. A put option gives dash a right to sell the asset at a given price. So when I'm buying the asset at a given price, the option is called as call option, and it is giving buyer the right. Okay, here in case of put option, dash is a right, dash gives the right to sell the asset at a predetermined price or given price. So whether it is A, buyer, B, seller, C, government, or D, none of the above, again it is the buyer. So here what is happening is, now in put option it gives buyer the right to sell that asset at the given price or strike price. I should be saying strike price. So put option and call option. I hope the idea of what options are, what call option is and what put option is are pretty much clear. Let us now move to the next question, which is talking about participatory notes or P notes. So what is true with respect to participatory notes or P notes? P notes. So here the underlying options are A, issued by foreign institutional investors, Then we have option B, India based brokers buy these securities and then issue participatory notes to foreign investors. So what is happening is an Indian based broker is going to buy securities from the market, and then he or she is going to issue a participatory note against that security to someone who's a foreign investor. Okay. Third point is, it is a financial instrument used by investors who are not registered with the Securities and Exchange Board of India. Obviously, some foreigner who is not registered with SEBI, he or she might be interested in investing in India. Therefore, what they will do, they will go to an Indian based broker and take participatory notes from them and invest in India, and all of the above. So these are all in a sense true. All these points are true with respect to participatory notes. That means option D is correct. That is, it is issued by foreign institutional investors. Indian based brokers first buy the securities and then issue participatory notes for those foreign investors who are interested in India, and this is for those who are not registered with the Securities and Exchange Board of India. So all these three things are true with respect to participatory notes or P notes. I hope this question is pretty much clear. Let us now move to the next question. Dash is an investment vehicle. Dash is an investment vehicle traded on stock exchange, much like stock. So what is that? Whether it is exchange traded funds, whether they are participatory notes, whether that is money or none of the above. So here it is pretty much clear, and it is you have to probably remember this, that it is exchange traded funds which are in a form of investment vehicles traded on the stock exchange, just like stocks. So option A, exchange traded funds or EFTs is a form of, or is an investment vehicle traded on the stock exchange, just like a stock. I hope this question is pretty much clear. Let us now move to the next question, which is talking about a market, in which market this thing is happening. So Dash is a market for buying and selling of foreign currencies. Buying and selling of foreign currencies. A, foreign exchange market. B, Reserve Bank of India. C, State Bank of India. And D, none of the above. So here it is pretty much clear. For foreign exchange market, we write Forex, F-O-R-E-X. So therefore, Forex or foreign exchange market is a market for buying and selling of foreign currencies. So this option A is the correct answer to this particular question. Forex is the short form for foreign exchange market, F-O-R-E-X. I hope this question is pretty much clear. Let us now move to the last question in this segment, which is talking about the importance of obviously foreign exchange market in any country. So let us look at how the question is framed. Which of the following denotes importance of foreign exchange market, Forex market? First is, it helps in international trade. Second is, it also helps in balance of payment, if at all you have seen how balance of payment equilibrates or how the disequilibriums happen. So again, foreign exchange plays an important role in making sure that there's a balance of payment. Third is capital movement, that is movement of currency from one country to another, and all of the above. So in a sense, both all these three things, that is international trade, BOP and capital movement, corresponds to importance of foreign exchange market in any country, particular country. So therefore option D, all of the above, is the correct answer to this particular question. I hope the questions related to now these questions are in a sense the important questions with respect to last part of chapter 3, which is financial markets. So foreign exchange market, and then this marks, I think, the end of the third chapter as well. In the next chapter, we'll start with some of the important financial institutions in India, for example, the development institutions or the development banks and all of these. So please stay tuned for more. Thank you.